Hello and welcome to the CryptoBasic Podcast. I'm your host, Brent, and we are here today with a featured project episode. We're going to be talking about the Emberfund, Emberfund.io. It's where you can find them. I'm here with the co-founder of Emberfund, Alex Wang. We're going to get to learn about his story, learn about the story of the project, and how they've created a non-custodial fund where you still control your own private keys. It's a very interesting project, and they've done an interesting job of creating it. It is important for you to understand that featured projects are sponsored content. So we were compensated for this episode. And we will continue to be compensated if you go to emberfund.app.link/cryptobasic when you sign up for Emberfund. That will be a code that is active for us for the next couple of months, basically. And we get a small kickback for anybody that ends up taking part in the fund. So again, you can check out emberfund.io to see about the company and everything that goes on with them. And of course, you can sign up there, but we would much prefer it if you sign up at emberfund.app.link/cryptobasic. We do get a small kickback if you join their fund. Sit back, relax, enjoy this episode. And if at the end of the episode you are interested in the Emberfund, you can go check it out in our show notes. Remember, we actively filter out 99% of the sponsored content. That's because there is a lot of content that I believe are not good actors in the space. They are an ICO trying to pump their coin, or an IEO, I guess now, and they reach out to us all the time, and we constantly turn them down. Keep all that in mind, and while doing so, please enjoy this featured episode of the CryptoBasic Podcast. Totally. I had a breakthrough moment with a group that I am friends with. They all think crypto's a scam, right? And we were talking about politics in this WhatsApp group, and I was saying, well, actually, I think liquid democracy is really important. If we could just pull our vote from these people at any time, that would be great. And they're like, well, yeah, but you couldn't do that. You wouldn't be able to prove all, they started going through all the problems. And I'm like, you guys aren't going to want to hear this, Yep. But this is already solved. All right, everybody, we are here with the CEO of Emberfund. Emberfund.io is where you can find it. This is Alex Wang joining us on the show. Welcome to the show, Alex.
Thanks for having me.
No, thank you for coming on the show. And before we dive into what the Emberfund is and how it works and all that, let's talk about who you are, how you came to it, and why you're in the crypto space.
Sure. So back in 2013, I actually had a e-commerce store, and that's when I first heard about Bitcoin. And I was intrigued, but I didn't really dive head in yet. But I wanted to just honestly use it as a payment mechanism, just kind of as for fun, a marketing kind of ordeal, and ended up not really doing much with it until 2016. And unlike I think a lot of other people, came in strictly for the speculation and stayed in because of all the interesting political and social and economic implications of it, right? I just put in like a couple $100 being like, oh, this seems like it's skyrocketing. Like, cool, let's see it's all about. But kind of learn more about the technology, and then just became completely, obsessed with it. And at the time, so from 2012 to 2016, I built a e-commerce company and then sold it. And then 2016 into late 2017, I was working as a product manager at a computer vision company. And that's kind of where everyone there was super crazy about blockchain and crypto, and kind of reignited my interest in it. And, began investing a little bit, and then just learned more about what it was beyond just a speculative asset. And like I said, became so obsessive with me and 3 other engineers from the company left to start Emberfund. So that's kind of how it all started.
That story really resonates with me, and I'm sure it resonates with a lot of the listeners, because there's plenty of people who got in for the speculation, and then as soon as the speculation was no longer there and we ran into the bear market, they got out and they're not back. They're not like, hey, can't wait to come back and talk about the tech that Tron coin that I had was working on, or whatever the case. But there are so many of us that came in because of speculation, or because a friend was like, hey, you got to get in on this crypto train, it's going crazy. And then once we learned, we were like,
totally.
Oh, okay, yeah, this is the implications of this are massive. So I think you're going to have a lot of intersection with the people that are going to be listening to this, because if they're still listening to us through the bear market and through all that stuff, they're going to be aligned with that.
Totally. And I think what's interesting about that too is, a lot of the hardcore crypto people and crypto anarchists are like, oh yeah, who cares about price or whatnot? But the reality is, I think it draws in a lot of people when an asset goes up, 10x in how much time. It draws a lot of eyeballs. And I would say when a bear market comes again, 90% of those people probably leave, but there's 10% that stay and are captivated by the technology and end up building the next iteration of the industry, I think. And so at least that's my perspective. I think speculation and price is an important driver of attention, which generates interest, and then kind of more entrepreneurs, more people enter the space because of it.
Yeah, that's actually a refreshing thought. We tend to not cover price or anything like that when we are on our show, but I am 100% aware of what the price does, because that's what drew me in. That's what drew you in. That's what drew everybody here. And then once you learn, you learn. I feel like if a lot more people got past, there's also a group of people that won't get in because of the price. So if they got past that, maybe they would learn also and be a second little group of 10% of people that would be getting through. Totally. I had a breakthrough moment with a group that I am friends with. They all think crypto's a scam, right? And we were talking about politics in this WhatsApp group. And I was saying, well, actually, I think liquid democracy is really important. If we could just pull our vote from these people at any time, that would be great. And they're like, well, yeah, but you couldn't do that. You wouldn't be able to prove all, they started going through all the problems. And I'm like, you guys aren't going to want to hear this, but this is already solved. So anyway, that was cool. All right. So we're here to talk about Emberfund. I don't know why I randomly told a story, but I did. No Sorry. We're going to talk about the Emberfund. And first, give us kind of the overview. Should I be calling it the Emberfund or Emberfund?
Emberfund Fund, yeah.
Okay.
Yeah.
So tell us all about Emberfund, and now that we know what led you there, what is it? What unique problem is it solving, and how does it work?
Yeah, totally. So Emberfund is a mobile app that effectively allows anyone from around the world to invest like a crypto hedge fund. So our vision is really to take all the financial products that sophisticated investors use, hedge funds, institutions, in the form of like quants and fund managers, and democratize it and make it available to pretty much anyone in the world. The important piece of this is that we're non-custodial. What that means is we actually don't touch the money at any point. We never touch the asset. That in turn means, all the private keys, we don't store any of that. So we have no way to move it. We have no way to withdraw it. During the exchange process, we never quote unquote touch the money. And we think that's really, really important and something that's easily lost in the industry today. And we think it's important because it's more secure. So instead of, we've seen Binance in this past month, we've seen tons of exchanges have been hacked. We actually don't have like a central trove, right, of assets for hackers to go after. All of the assets are decentralized in the thousands of users that use the product. So from a security perspective, we think that's super important. From a transparency perspective, that's the whole point of crypto, right? Is really to be your own bank, custody your own assets, and see what's actually happening on the blockchain. So that's really important to us. Number 3 is that because we're dealing with Bitcoin, we're not actually interfacing with the traditional banking system, and we have users around over 200 countries. And so it's something that our rocket science is really to take this notion of almost like a non-custodial wallet and apply asset management to those assets. Right? So when you think about traditional models in the space, it's like a Coinbase. I'm going to take your money, I'm going to custody in it, and I'm not going to provide any asset management. We think the model should be completely reverse, right? Where you're custodying your own assets, but we're kind of applying asset management technology to those assets.
So yeah, I want to dive into more about how that works, because the thing that got me excited about Emberfund versus, a lot of these other projects that reach out to us, every fund that's ever reached out to us, I've told them to go pound sand. We're not interested in having you on the show, because that to me is just another way for a group to grab somebody's money, get hacked with air quotes around it, or, do an exit scam or something like that is just rampant.
Totally.
But the idea of a fund that was non-custodial was super cool to me, because Binance is releasing that thing they were calling a decentralized exchange, but it's really just non-custodial exchange. And non-custodial is important. And also it's important that there's an infrastructure around something like a non-custodial exchange, because it's really hard to do it on your own. So you want to hold your own private keys, but you also need the infrastructure to do this stuff. So you said you were able to do non-custodial asset management. So how does that work once somebody has gotten into the process? So, and I don't know what your percentage breakdowns are of which coins you might invest in, or even if you make those public, but are they holding an asset that is mirroring something, or are they actually holding all of the different Bitcoins or cryptos?
What's special about us, they're actually holding the underlying assets. There's no derivative, there's no coin, there's no ICO. You're actually holding on to every single asset in your portfolio. And to answer your earlier question, we make it public because our value is that we want to make it just super easy for people. So in the background, everything is done for you, right? So we light up the wallets, we search multiple exchanges for the best price and help facilitate all the execution. And so, we just present it all behind a beautiful UI. So it looks like you're investing in a normal app, but all the kind of magic happens behind the scenes. So you don't have to worry about your private keys. You don't have to worry about the login mechanism is just completely familiar, but all the infrastructure and the technology is really special and really powerful.
So if somebody wanted to, they could do exactly what you were doing just by looking at your public, these are our percentages.
Yep.
But
totally.
Instead, if they don't want to go through the problem and figuring out how order books work and all of that, they have the option to do this with just as much security, which is cool.
Yep. I would argue more security because, again, the assets are not custodied on an exchange. It's actually on your mobile device, right?
Right. Yeah. So they could, if they don't take the extra step to take it off an exchange, which we're always preaching, then it's significantly safer to have your own. So how does you said the login works like in a familiar way. So you're not doing the private key, public key pairing. Yep. So is there an encryption there that basically changes the username and password to that?
Exactly. So your username and password are effectively your keys to unlocking your assets, and only that combo will work. And it's called like client-side encryption. So everything is done on the phone. And then what's interesting is that there's actually an encrypted version of the private keys on your phone. First of all, I should mention there's a feature that we're building right now where if you wanted to, and you're an advanced user, you press a button and you can see your private keys.
Oh, cool.
Right? We're completely transparent about that. And the second part of that, which a lot of people ask is, okay, what if I lose my phone? So the way that we work is that there's actually an encrypted version of your keys that are backed up. And so if you lose your phone and whatnot, you can light up a new phone and then be able to log in. And if our database was compromised, that encrypted data is of no use to an attacker.
Because they need your username and password.
Totally. To decrypt.
Yeah, so they would just get a bunch of gibberish, and then if they happen to know your username and password as well, then they could do that, but that's kind of crazy.
Yep.
So that's cool. So yeah, you because everybody's probably run into this problem. Well, maybe they haven't. Maybe it's just me, but I didn't back up my two-factor authentication on one of my phones, and I switched phones, and that was a massive problem. Yeah. But you wouldn't run into that, even though it's paired with the phone. You could just basically use whatever that algorithm is that creates the private keys, and you're good to go just with the username and password.
Totally.
So that's also super cool. So I want to go from there into how moving around the assets would work. So obviously you do rebalancing on the hedge fund. Is there like a button you press inside to say, okay, I want to rebalance?
Totally. Yep. So the way it works right now is for a couple of our funds, there'll be, let's say, an update to it once every, let's say, 2 weeks. And you'll get a notification, and then you actually go into your phone and press a button. And then that's effectively when you sign and broadcast the transactions, and then everything, all the magic happens.
Okay, awesome. So yeah, you're essentially saying, okay, I'll take the new allocation. Would you have the option to just leave it if you didn't want? Cool. Yep. So yeah, if you didn't want the new update, you're just like, you know what, y'all are investing in that coin I don't like there, so I'm gonna leave it.
Totally.
So you mentioned funds. So are there multiple kind of tracks that you can go on?
Yep. So there's quite a few. So we have one that is called the S tier fund, and that's managed by a guy named Marius Kramer. So he's the number one writer on crypto on Quora. And then we also have another one, Data Dash, who's a big influencer on YouTube, and then a couple others that were constructed in-house.
I am familiar with Data Dash. I've tried to get him on the show to talk about a coin that he shilled, and they ended up being a scam. Yeah, I have shit all over Substratum on this show, and I tried to get him to talk about it, and he wouldn't. Yeah,
I don't know what's going on with that, to be honest, but I did my own research on it. It does not look good.
Yeah, we had a couple of experts on the show on it, and
I mean, Nicholas is definitely legit. I mean, he's 100% like honest, but Substratum, not to talk shit about another. Can we cuss on this show? I forgot.
Yeah, absolutely. I use the phrase shit on all the time, and I've had listeners say, "Please don't use that." I'm like, "What? I'm gonna say
it." Okay. Yeah, but that project. I mean, not to talk shit, but
yeah, it's hard to say like this thing is a scam if it's still working and running, but there were just so many red flags on it, and it's it's something that was in the top 100 that's barely in the, I don't even know, the top 500 now at this point. So totally. I think that it's a warranted criticism. Whether they end up going under or not, we'll see. But anyway, I know he's at least apologized for that, and I just there was a period where he wasn't, and I've said like one of his things that he does that works really well for him is he doesn't ever say anything bad about coins or projects, so that works for an influencer, because every time we say something bad, the community attacks us. It's like clockwork.
Yep.
It's like, oh, these guys said something bad. All right, here come all the...
That's why the way to do it is like Andreas. You just don't say anything about any coin ever.
Yeah. Yep, that works. That's not what we carved out in the space, but that's, to each their own. Yeah. All right, so we'll go back to the fund. So you've got a few funds run by basically well-known people.
Yep.
And if you like them, you can go ahead and join their particular fund.
Yep.
There was a project like this that I'm trying to think of off the top of my head, Economy. But obviously they were not non-custodial.
Yep. And I don't think they're available in the US, although that might have changed.
Yep. I wish I knew anything about them, but I just thought of them as a competitor off the top of my head. And then, but again, do you guys have any direct competitors that are doing this non-custodial in the space?
No,
it doesn't feel like it.
So there are quite a few projects out there that are like crypto wallets, non-custodial wallets without asset management. But to my understanding, or to my knowledge, there are no mobile crypto asset management that's non-custodial. And I think the reason is just because the tech behind it is there's a lot of barriers to entry there in terms of kind of the building that infrastructure and the technology to do that, right? And we're lucky to have a really talented engineering team, and also some really, really great partners for the on-device encryption.
It seems like that's a place where a lot of companies might skimp, because there's going to be a lot of upfront work to that.
Yep.
There's going to be a very small subsection of the crypto community that even appreciates it. Most of the random speculators, they don't care if they're getting their speculation on Coinbase or, hit BTC or Emberfund. They don't care where it comes from because they don't know the difference.
Yep.
So the small subsection that will gravitate towards you guys and is like, wow, these guys are actually really doing a good job. That's a lot of investment to put out there just to target them. But I appreciate that massively because I'm part of that group. But at the same time, most companies, they're going to say, well, we don't even need that. We're never going to steal somebody's funds or lose somebody's funds. And then things change.
There's a couple of things to that, right? So number one, as I mentioned, we have a really talented engineering team. My co-founders are all tech gurus that have scaled massive technology companies. And then we also were fortunate enough to partner with a company called Edge Wallet and use a lot of their client-side encryption technology. And so we were able to kind of shortcut it. I mean, we built this platform amazingly in pretty much 7 months because of that.
Wow.
Yeah, that was awesome. And then the other piece of it is that a lot of our users actually do understand the value of the whole being non-custodial. I think it's because the type of person that's naturally drawn to this at some point understands the whole point of this is to custody your own asset, right? Look at the original white paper. That was the original purpose of crypto assets. And so that's one piece. Another piece is, you're right, there's a large subset of people that don't know anything about the custody and whatnot. And I would just say it's okay because, from a regulatory perspective, you wouldn't be able to actually provide a product like this without being non-custodial. At least we wouldn't, for numerous reasons. Number one, there's, state-by-state money transmission licensing, which is, hundreds of thousands, if not $1 million to get. Number two, we're not pooling any assets, right? So if you're a traditional hedge fund, you pool together assets, you invest other people's money, and those other people need to be accredited investors, right? So you need to have $1 million bucks in the bank or make over, I think, $250,000 a year. So the reality is we wouldn't even be able to provide a product like this to those people, right? So for those people, it doesn't really matter that they don't understand the value of being non-custodial. They get to have access to a product like this.
I didn't even think about the regulatory implications because obviously, sometimes I take things like that for granted. But yeah, obviously, if you don't touch the stuff, you don't need accredited investors, which is nice. I took for granted that this was available in the United States because in crypto, that's not a normal thing, but in the real world, that's a normal thing. And then I look at your user interface, it feels like a normal world thing versus a crypto thing.
We're trying to bridge that gap, right?
No, I think you're doing a really good job. That's why anybody who might come to Emberfund and end up not caring particularly about whether it's non-custodial or not is going to see the user interface. They're going to start using it, and they're going to be like, oh, this is simple. This is way easier than trying to take a selfie with my ID at Poloniex, or not Poloniex, Kraken or wherever, and stuff like that. So just because I thought about that, what are the know your customer laws / situations here? Do you need that from each person?
Yeah. So right now, with all the crypto so we actually integrate with Coinbase as well as a company called Wire. And so when you on-ramp with them, they obviously do the KYC AML. With Wire, you can connect your bank account, and anytime you touch the traditional banking system, like there's KYC AML. And then you can also, for us, we can actually also deposit Bitcoin. So our exchange partners are kind of monitoring all the transactions, but when you do deposit Bitcoin, there isn't KYC AML there, but obviously with the Coinbase and the Wire piece, there's KYC AML.
Okay. So it's know your customer by association kind of if you go through a partnered exchange.
Yes.
Okay. So, but if I'm me and I'm being, careful about my privacy, and first thing I would not do is create a crypto podcast with my real name. But the second thing I would do is I would get involved via Bitcoin. I would transfer into like an internal wallet, and then it would be attributed to my account.
Yep.
Okay.
Yeah. I think that's a really interesting point right there. With a traditional crypto app, all of your information can be subpoenaed or whatnot, right? Or your account can be frozen.
Right.
For us, we're just creating the software layer for you to manage your own assets and deposit crypto in kind of your own way. And so there isn't that piece of it, right? Where there's nothing to subpoena. We don't have your information, right? At least on the Bitcoin deposit piece. I think that's a really core piece of kind of what we're trying to build too.
Right. You want my information, you got to go to Coinbase, or otherwise I didn't, when I'm signing up as a user, I'm not even am I putting in name and all that stuff, or just user and password?
Just a username and password. And then, an email to, obviously, because we need to communicate with you on certain things, but that's pretty much it.
So right now, what was your primary fund called?
The S tier fund.
S tier, yes. Okay. So what does that fund's assets look like kind of as of today?
So today, we just did a rebalance. It's Litecoin because I believe we just rebalanced into that. We have Engine, BAT, and Dent, and I think that's it for now. Yeah.
Okay. 4 assets. Like, was Bitcoin one of them?
It was, but I believe we rebalanced out
Okay.
a while ago. And yeah, it's our most popular fund, and it's outperformed the market pretty substantially. I think when Bitcoin was like at 120% year to date, was it last week? We were like at 135. So yeah, we've been outperforming the market. I'm going to take a quick look. Yeah, we're at 131% year to date.
Okay, and I love Engine and I love Basic Attention Token.
Yep.
I don't know anything about Dent, so what this has done for me, if nothing else, is I want to take a look at that now.
Totally.
Because I don't know anything about it.
Totally.
So, but because I like the other 2 assets, and obviously I like Litecoin also, and Charlie Lee is actually pretty good for the space in my opinion. Although I guess he doesn't have any anymore. So, but I do like listening. He's one of my favorite Twitter follows. So some of the other people, let's say like Datadash or Datadash, Nicholas. Do you know what his looks like off the top of your head?
I think his is pretty basic right now. It's just Bitcoin, Ethereum, Litecoin, and Dash, and then he'll probably do a update within this next month. He's pretty conservative into the assets. The S tier funds is a little bit more of an aggressive fund. Marius spends a ton of time kind of researching coins and making sure that the fundamentals of the coins that he's rebalancing into is solid. Datadash's fund is more towards an index fund in the sense it's market weighted. It's not as aggressive in terms of, weekly or bi-weekly rebalances. And so, yeah, it's a little bit of a different fund structure.
So are all the funds for coins or just
no,
because we happen to talk about those too?
It still happens we're talking about those.
Okay.
Some have
cool.
3, some have 6. It's really nice.
So if I pop into the app, you said that the S tier was more aggressive and you said that the Datadash fund was more on the conservative side.
Yep.
When I'm at work and I'm looking at mutual funds and that kind of thing, I would see, this is aggressive, or these are the percentage breakdowns of like the sectors. Is there something similar inside of the Emberfund application?
You're saying that shows how aggressive it is and kind of shows what type of fund this is, or?
Yeah, I don't know, like a star rating of how crazy the person might be being, or
that might be actually a good idea.
Okay, sorry, I didn't mean to call out like a missing feature.
No. It's definitely a good idea. We have a description of the fund in terms of the strategy, the rebalancing frequency, all that stuff in the app, but we don't have a star rating yet. Maybe add one in.
I appreciate the fundamental approach that it sounded like you were taking it on that S tier fund, because that's how we see the space. And it's such a small space that it's so hard to separate the fundamentals from the hype.
Yep.
And the hype can create great short-term gains, but the hype isn't going to be here 6 years from now if that's all it's there.
Yep. So I think that's super important. And Marius the way he looks at the coins is really, they're permissionless, they're properly decentralized, they have millions of users, a couple other parameters. But the way I like to think about it is, you can have a coin that like pumps 100% in a day and then, ends up being a complete scam. And so these fundamentals coins, I think when you scale it across time, the hope is that, for example, Engine is a classic example. Coins like this are the types of coins that Samsung wants to partner with, right?
Right.
Long term. And so for sure, in a week, you're going to get crazy returns. Probably no, but scale it across enough time, we believe that it can produce substantial returns. With that said, crypto is highly speculative, high risk, and we put it in our app to let everyone know that, at the end of the day, it's super volatile, it's high risk. Don't invest more than you can afford to lose.
Well, I was going to say that at the end of the episode, but that's why you can put it out there.
I did it for you.
We have like a disclaimer where we say like, we're idiots, don't listen to us. And then we'd say something very similar to that. I would say that a fund is probably directly less volatile than a single asset. And I don't know if that's something I'm allowed to say, but it just investing in 4 assets seems better than investing in one.
Yeah.
So
that's kind of our entire thesis is kind of around diversification. And there's a lot of evidence out there to show that the risk return profile is just much better when you have proper diversification. And I think, it's tried and true for the equities market. And I definitely think that it carries on to crypto assets as well.
Yeah. I mean, obviously we're in our uncharted territory, more or less. I mean, we've had 100 and change years of the stock market to kind of take a look at how equities work, but things are completely different in this space with new asset class. So being on the front end and pioneering solutions for lowering risk or identifying fundamentals is really important, I think, and is being lost on a lot of the big hype machine groups. So moving a little bit forward, you guys obviously do make money in some way on this app. Is there like a monthly fee for signing up, or?
So it's free to download. We're super transparent on the fee, and we just keep it really simple. We charge 1.5% for every transaction, whether you buy or the portion that you balance. And everything, again, is on the blockchain, so you can see exactly how much of each asset you're getting, how much our fees are. We think that's another piece that's actually kind of missing. Everyone seems to, talk about how trading on their app is free, and it's never free, right? So, with custodial solutions, they're investing your assets, right? The uninvested assets are sitting there, and they're investing it, and they're getting a return on it. Most other crypto exchanges or companies or products, they make a spread on the back, right? So there's no way that, they're just out of the goodness of their heart are providing a product for you to use for free. They're doing something, right? And so we kind of took a different approach and said, just be completely transparent. We need this in the space, right? And if we're providing enough value, then, people will use our product, which they are. If we don't, then we need to kind of reevaluate, right? And so far the traction has been amazing, and no one's really complained about kind of our fee structure, and people have been happy.
Every company that's providing a service should be able to charge for that service.
Totally.
And what I really appreciate about what you're doing with that is right at the beginning of the episode, you said you could do this on your own if you wanted to. We're just making it super easy.
Yep.
So that is the service, in my opinion. You're saving somebody all the time of deposit onto exchange 1, 2, 3, and 4, go make all the trades, withdraw from exchanges 1, 2, 3, and 4, put it on your own personal private key area, and then do it again 2 weeks later.
Yep.
To rebalance everything.
And I actually, I welcome people to do that. I think if they are a sophisticated enough trader and they want to deal with that, I welcome them to take a look at the app, copy the allocations, fine. We just, as you mentioned, really want to make that streamlined, really, really simple. And if people see value in that, then hopefully the 1.5% is a good number. And if they don't, then, they can go link up to 5 different exchanges, hardware wallets, whatever they want to copy our fund.
Just maybe not Trezor.
Maybe not Trezor.
Yeah. I just saw that come out, I think, yesterday.
Yeah.
Where there was a security breach on the Trezor. But anyway, yeah. So sometimes even these hardware wallets aren't completely safe. It's such a tough space to keep up with.
Yeah. I mean, and that's one thing. Like I had one, and it was in my backpack for like a year and a half, and it just stopped turning on. And, I'm sure they have great customer service, and if I sent it in, they'd take care of it. It's just a headache. It's just another thing to think about and worry about. And we think the phone is the best place to keep your assets.
Yeah, and some of this is going to fall on the user to create a good enough passphrase.
Yes.
So that it's not, somebody can't just, brute force it when they get a hold of their phone.
Yep.
And do you have any extra qualifications on the passwords, or do you just really say, please make this secure?
Yeah. So I would say that's one of the things that is an education piece that we're trying to get people to understand, is that with this new asset class, there's always trade-offs, right? And it's really powerful to be able to custody your own assets. There's a level of responsibility there in terms of creating a strong enough password, although we have password recovery and then kind of remembering it, right? So there's some security hygiene that needs to be taken into consideration. But I would add, I mean, we have all the security measures like, rate limit, so you can't brute force. And then also, just a bunch of things that we put in place to kind of make it easy and user-friendly for people, but also have all the security features.
I will say, going back to Engine, they have this a very good wallet that's been created. But one thing that annoys me is they have a keyboard that's like supposed to be a secure keyboard that's built into the app. So I can't use a password manager to put any of my passwords in there. And all my passwords are different. Like there isn't and they're all nonsensical. So like there's not a single one that I could actually put on there. Do you guys have a similar secure keyboard, or is it normal?
Ours is a normal keyboard. Yeah, it's a normal keyboard.
And I run into this because we send Engine tokens to our Patreon members. If you're a part of our Patreon, you get like a little thing that says you're a Patreon supporter.
Very cool.
And we send an NFT to them. And every time I have to send one, I'm like, oh my God, I got to put in this stupid password by hand. What is this, the 80s?
Yes, that's the funny thing is that I think as the industry kind of progressed, the core roots are just the, hardcore, coders, engineers, cypherpunks. And they really needed like a UI guy or girl. They really need a designer UI guy in the early days.
Yep.
Because it just doesn't make sense for most people to have to like public key, private key, like is it, wallet, seed words generating. No one understands it. No one's going to understand it until more solutions come out that are just more user friendly. You need to abstract all the layers behind a beautiful UI for mass adoption to happen. I think it's starting to happen, and I'm excited about that.
There's a reason everyone uses Coinbase. It's not because their customer service is exceptional. It's not. And it's not because they're providing a much better product. It's not any different, but they are providing a much nicer, easier, clean interface that people can get to quicker. They're paying more for that.
Absolutely.
And I was banned from Coinbase for a year. I opened it in Cuba.
Classic example. That wouldn't happen on our app.
Yeah, Cuba's cool.
Well, sorry, say that again?
I was in Cuba.
Oh, Cuba. Wow.
I just muscle memory. I was like, oh, let me check Coinbase. And I logged in, and then I got the blow up that's like, what are you doing? This country has an embargo. I'm like, oh, no.
Wow.
And I knew I messed up, but it took them over a year to open the account back up because of just back and forth with customer service. It was insane. But yeah, so the grandma friendly, and I don't know if that's the right word because it's tough to be grandma friendly in tech, but that's the euphemism that people use, is the important piece of the adoption puzzle. And again, I only checked out the app quickly before I got you on the air. It feels like you've got that done. And everything you're telling me on the show, it feels like you've gotten that done. I think that most people aren't starting from that. They're starting from a point of maybe they're starting from non-custodial, making that work rather than starting from a point of non-custodial with a great user interface and making that work.
Yep. And it's a function of the tech too, I think. Without some of the partners that we've been fortunate enough to work with, I don't know that this would be easy to do back in, 2013, 2014. So a lot of things have actually obviously progressed in the space that have allowed us to do what we do.
I think they'll keep progressing. It's, the bear market's happened, and all my friends that were, like we mentioned before, oh, they got into it. Now what happened? Now it's a scam. And they keep asking me about it. And I'm like, look, I know the price is down, but everything's only gotten better. Yeah. The tech's only gotten better. The community's only gotten stronger, and the security's gotten stronger, and the use cases have increased. So, the price didn't really reflect that. I don't know if it's still too high. I have no idea. But what I can tell you is I'm watching this space evolve more and more. And each new project that is like this, that understands where they are in the space, isn't trying to run off trust. Running off of trust in a trustless ecosystem is just doesn't make sense in my opinion. And to me, that means you don't understand the ecosystem. So you got rid of that. And I think that's really cool.
Thanks. Appreciate that.
So we're coming up towards the end. I want to make sure I didn't miss anything. Like we've got a little bit of extra time if you want it. What else do you want to tell us about Emberfund, about you, about anything that we haven't talked about yet?
I guess a couple of things. I do want to call out my co-founders. Absolutely did not do this alone. Mario and Guillaume, who are the CIO and CTO of this company, respectively, really helped build the company into what it is today. Some of the most talented engineers that I've ever worked with, and it's large in part because of them that we're here today. And I definitely want to acknowledge them first and foremost. And then, I guess the next phase for us is really building this out to be even more than what it is today. We're super excited. We're working on a quant fund, which I'm personally really excited about, which will allow for algorithmic trading in a non-custodial way. So that's something that's in the pipeline. And then we have a ton. Go ahead.
So when you say a quant fund, that's quantitative analysis.
Yep.
And the user wouldn't be doing the active trading, but the fund would be.
Yep. So we're working on, cool. I don't think anyone else is doing this, but we're working on a way to effectively pre-sign transactions and then broadcast the trade from BTC to a stablecoin and back from our back end. And so, it's still kind of in the R&D stage, but something I'm personally super excited about. And
pre-signing transactions sounds interesting. Like you could say, here's authorization for the next 5 or something like that.
Something like that. Yeah, we're just going to continue kind of innovating on that front. We think that blockchain is kind of the best medium to be able to take all these powerful financial products and make it available to the world. So we're really excited about that.
Do you have plans to bring on more kind of featured investors or featured fund managers?
Yep, we're actually in the works. I can't talk about any of them just yet, but we have 2-3 pretty big partnerships that we're going to be announcing soon. But got to keep that under wraps until it actually happens.
All right, no exclusives today on the CryptoBasic Podcast. I was just thinking in my mind, I'm like, that seems like a really cool way to help out your platform and, get it. I don't know, you get the PewDiePie fund or something like that.
That would be awesome.
And just make it clear that like these guys are not investment professionals. They're just famous. Yep. But hey, if you want to do what they're doing, go ahead. So any other features off the top of your head that would be coming soon in the roadmap? Yeah,
we're working on just a bunch of tech upgrades. Right now, when you liquidate the fund, it's kind of selling the entire thing. We're working on being able to sell part of it. We're working on, just a lot of infrastructure stuff that probably won't be exciting to your listeners, but stop losses is something we're looking at. A couple other things.
So for the listeners, like we mentioned at the beginning of the show, this was sponsored content. And part of that was that we have a code you guys can use. If you were interested today on what Alex said about Emberfund, in our show notes, you can go in there and go through our affiliate link, basically, and join the Emberfund. That kind of gives us credit, more or less. You can go through there. What is the minimum if one of our listeners wanted to go through and do that? Is there a 50, 100, 5,000?
Yeah, right now it's $300.
Okay.
So, to invest in 2 out of the 5 of our funds right now,
And some of them are a little bit higher than that.
Some of them are a little bit higher. That's strictly because of the exchange partners. So trying to work on getting that down, but right now it's 300.
To me, it makes sense that there's a minimum that it would even be worth working with on, like, even with your 1%, you might lose money if you were to go like $10 or something. So
what's interesting, we're just talking today about it, but to do transactions on chain, it's a challenging thing, large in part because of mining fees too, right? So it's not just like you deposit $100 and everything's fine. When you're swapping coins, whether it's Bitcoin or an ERC20, there are mining fees that are associated to that need to be accounted for, right? And so right now we're kind of just facilitating all the trades and paying it out of pocket because it's so little. But it's something that we hide from the user, and it's something that is kind of a consideration and makes it challenging. But yeah, that's kind of why sometimes we actually started with $100, and then because of minimums with exchange partners and whatnot, we had to bump it up to 300. But we're in the next probably 60 days, we're going to try to bring it down again.
Well, yeah, if the fund doesn't have Bitcoin, it's a little easier because the transaction fees on Bitcoin got up there.
Yeah.
Which was brutal.
So it's like, yeah.
So yeah, we pay our editor with Bitcoin for the podcast episodes, and I was like, look, I'm gonna have to start sending you Ethereum if this stays the way it is, because we're not paying you enough to take those kind of transaction fee hits.
Absolutely.
So through our link, or you could just go to emberfund.io, whichever you prefer, and you can sign up there, deposit at least 300, and you're working in the system, you're picking the fund that you want to go with, and every now and then we'll give you a push notification for when it's time to rebalance.
Exactly. A push notification and an email.
Okay, perfect. And the 1.5% fee, is it on each rebalance or just the initial deposit?
So when you deposit and then when you sell, both have 1.5%. And then when you rebalance the portion, we typically rebalance like 10% of the portfolio. So for that portion, same thing. It's just flat 1.5%.
Okay, cool. So all of that makes perfect sense. I think we answered any questions anybody could have had about Emberfund, about you, and about how everything started. So other than emberfund.io, where can we follow you on social media or YouTube or anything like that?
Yeah, that's actually a great question. Join our Telegram group, and we're actually, the whole team is on there. We have a community of about 500 people that are pretty engaged, talking every day about the product, about just the industry as a whole. And come check it out. You can go to emberfund.io and click on the little Telegram button, and they'll direct you into our chat room.
All right, Telegram group it is. We chose Discord, but I like Telegram too. Telegram is almost where I do business, and then Discord is where I have fun with the podcast, I guess.
There are so many today. It's like Telegram, Slack, Line. It's all over the place.
Do you remember back in the day when there was one called Trillion, I think, that united everything? It was like AOL Instant Messenger and like ICQ.
Yeah.
We need that again. What happened? How did that disappear?
Business idea right there, man.
All right. So, Alex, thanks again for coming on the show. It's been fun.
Likewise.
And everybody check out the show notes for all applicable places. We'll link the Telegram there. We'll link everything you need to know.
Cool.
So we'll see you on the next episode.
Sounds good. Thanks.
Bye.